Welcome once again to our commerce classroom. In this session, we will discuss about contract costing. We know contract costing is that form of specific order costing which applies where the work is undertaken to customers' requirements and each order is of long duration as compared to job costing. The work is mainly of constructional in nature. Example, construction of plants, buildings, bridges, dams, ships, then complex pieces of equipment, production of motion picture, etc. All these come under contract costing. Then we have one definition for contract costing. The definition is this: contract costing is defined as that form of specific order costing which applies where work is undertaken to customers' special requirements and each order is of long-term duration. This definition given by CIMA London. I repeat, contract costing is defined as that form of specific order costing which applies where work is undertaken to customers' special requirements and each order is of long-term duration. Then we explain what are the features of contract costing. The first feature of contract costing is this: a contract is a big job, normally takes more than one accounting year to complete. Second feature, the work is executed at customer's side. Then third feature, a part of work is generally given to subcontractors because the nature of work is very big and it takes long duration. Then fourth feature of contract costing is this: most of the expenses incurred are direct in nature. Then fifth feature, cost control is very difficult in contract costing. And the last feature of contract costing is this: each contract is taken as a cost unit. These are the features of contract costing. Then we discuss about different types of contracts. There are mainly three types of contracts. First one, fixed price contracts. Second one, fixed price contract with escalation clause. And the third one, cost plus contract. First one, fixed price contract. In fixed price contract, both parties, contractor and contractee, agree to a fixed contract price. I repeat, in fixed price contracts, both the parties, contractor and contractee, agree to a fixed contract price. Then second type of contract, fixed price contract with escalation clause. It is actually a fixed price contract, but in some cases agrees to revise contract price according to accommodate changes in cost of material and labor. I repeat, fixed price contract with the escalation clause. It is actually a fixed price contract, but in some cases agrees to revise contract price according to accommodate change in cost of material and labor. Then third type of contract is cost plus contract. Under this contract, no fixed price could be settled for a contract. Value of contract is equal to actual cost incurred plus desired amount of profit. I repeat, cost plus contract. Under this contract, no fixed price is mentioned as contract price. Value of contract is equal to actual cost incurred plus desired amount of profit. These are all about these different types of contracts. Then we discuss about contract account. A contract account is a nominal account in nature. It is prepared to find out cost of contract and to know profit or loss made on the contract. A contractor may undertake a number of contracts at a time. For each contract, a separate account is opened. Then I will explain the format of a contract account, specimen form of contract account, unfinished contract. Then our contract account has two sides. We know debit side and credit side. And on the debit side, we saw materials, then labor, then plant, then overheads, cost of subcontracts, etc. Actually, on the debit side, we saw the expenses incurred in our contract. Then on the credit side, we saw work in progress. Work in progress include work certified and work uncertified. Then material returned, then plant less depreciation, then materials lying at the site. These are the items we saw on the credit side of our contract account. Then the difference between the credit side and the debit side, we call it as notional profit. Notional profit is not considered as actual profit. A portion of notional profit will transfer to profit and loss account according to how much percentage of work completed. Then the balance we will transfer it to work in progress. We will consider it as work in progress reserve. These are about our contract accounts. Then we discuss about terms used in contract accounts. First term, work in progress. It is the unfinished part of contract at the end of the accounting period, and it includes the amount of work certified and the amount of work uncertified. Work in progress is an asset, we know. We saw work in progress in the balance sheet by deducting therefrom any advance received from the contractee. I repeat, work in progress, it is the unfinished part of contract at the end of the accounting period, and it includes amount of work certified and work uncertified. Work in progress is an asset shown in the balance sheet by deducting therefrom any advance received from the contractee. Then second term, work certified. Work certified is the work done by the contractor and certified as completed by engineer of the contractee. Work certified is valued not at cost but at contract price. So, work certified includes cost as well as profit. I repeat, work certified is the work done by the contractor and certified as complete by the engineer of the contractee. Work certified is valued not at cost but at contract price. So, it includes cost as well as profit. Then the third term we discuss here is work uncertified. It refers to the portion of the work done by the contractor but not yet certified by the engineer of the contractee. I repeat, work uncertified refers to the portion of the work done by the contractor but not yet certified by engineer of the contractee. Work uncertified arises due to the fact that inspection is done only at periodic intervals while work is done by the contractor on continuous manner. Work uncertified is always valued at cost and doesn't include profit. Then the fourth term here we discuss is retention money. Regardless of the amount of work certified, the contractee paid a specified percentage of work certified to the contractor and the balance is held or retained by the contractee. This is because of the fact that the contractee has to safeguard himself against any contingency arising from the non-fulfillment of terms of the contract by the contractor. The unpaid balance of work certified by the contractee is known as retention money. I repeat, the unpaid balance of work certified or the amount held back or retained by the contractee is known as retention money. Then the fifth term we discuss here is subcontract. Sometimes the contractor enters into contract with another contractor to give a portion of work undertaken by him. In such cases, the work performed by the subcontractors forms a direct charge to the contract concerned. The subcontract cost will be shown on the debit side of the contract account. Then the sixth term, escalation clause. This is a clause which is provided in the contract to cover up any increase in price of the contract due to increase in the prices of raw materials or labor or in the utilization of any other factors of production. I repeat, This is a clause which is provided in the contract to cover up any increase in the price of contract due to increase in the price of raw material or labor or in the utilization of any other factors of production. If material and labor utilization exceeds a particular limit, the customer agrees to bear the additional cost occasioned by excessive utilization. Here, the contractor has to satisfy the customer that excessive utilization is not the result of decreased efficiency. Then the last term we discuss here is contract price. The amount agreed for undertaking the contract work is called contract price. I repeat, the amount agreed for undertaking the contract work is called contract price. Then we discuss about treatment of plant and machinery in contract account. One of the distinguishing features of contract is the use of special plant and machinery. The cost of these is capital expenditure in nature, but yet the usage of these should be reflected in the form of depreciation. There are two distinct methods of charging depreciation. First method, at the time of issue of plant to the contract, the contract account is debited with the full value of the plant. At the end of the period, the contract account is credited with the depreciated value. This method is used when plant and machinery is used at the contract site for a long period. Then second method of treatment. In the second method, contract account is debited with an hourly rate of depreciation for the number of hours the plant is used in the contract. This is all about the treatment of plant and machinery in contract account. Then we discuss about profit on incomplete contract. If there is any profit upon the incomplete contract, that cannot be taken as actual profit. The profit upon the incomplete contract is called notional profit. I repeat, if there is any profit upon the incomplete contract, it cannot be taken as profit. The profit upon the incomplete contract is called notional profit. For the purpose of determining the amount of profit to be transferred to profit and loss account and making provisions for future contingencies, the following guidelines may be kept in mind. Our first point, when the work has not reasonably advanced, I mean 1/4 or less than 1/4. No profit should be taken to the credit of P&L account in the case of contracts which have just commenced and a small portion of the work is complete. I repeat, when the work has not reasonably advanced, mean 1/4 or less than 1/4. No profit should be taken to the credit of profit and loss account in the case of contracts which have just commenced and a small portion of work is complete. Then our second point, where the work is complete more than 1/4 but less than half of the contract price. Formula, profit credited to P&L account is equal to notional profit into 1/3 into cash received divided by work certified. I repeat the formula, profit credited to P&L in case where the work is complete more than 1/4 but less than half of the contract price. Formula, profit credited to P&L is equal to notional profit into 1/3 into cash received divided by work certified. Then our third case, if the contract completed is more than half but less than 90%. Here, 2/3 of the notional profit should be taken to profit and loss account. Our formula, notional profit into 2/3 into cash received divided by work certified. The balance of notional profit shall be transferred to work in progress as reserve. Then our fourth case, if the contract is nearing completion, profit to be credited to profit and loss account is equal to estimated profit into cash received divided by contract price. Here we have to find out estimated profit. Estimated profit is equal to contract price minus total cost of contract to date plus estimated additional expenses to complete the contract. I repeat, estimated profit is equal to contract price minus the total of cost of contract to date and estimated additional expenses to complete the contract. Then we get estimated profit. Then our last and fifth point, loss shown by incomplete contract should be fully transferred into profit and loss account. I repeat, loss shown by incomplete contract should be fully transferred into profit and loss account. Then we solve one problem. Mr. X has undertaken several contract works. He maintains a separate record for each contract. From the following records for the year ending 31st December 2019, prepare contract account for the contract. Find the amount transferred into profit and loss account. Then informations. Direct purchase of material 2 lakh. Material issued from stores 50,000. Wages 2 lakh 40,000. Direct expenses 20,000. Machinery purchased 2 lakh. Establishment expenses 30,000. The contract price was rupees 14 lakh. Cash received upon 31st December 2019 was rupees 7 lakh, which is 80% of work certified. Material at the site on closing date rupees 16,000. Depreciation for machinery rupees 20,000. These are the informations. We know on the debit side of our contract account, we show expenses incurred in relation to our contract mainly. So our first item, material 2 lakh is an expense. Wage 2 lakh 40,000. Material issued from stores for the purpose of this contract 50,000. Then direct expenses 20,000. Machinery purchased 2 lakh. We saw this 2 lakh on the debit side, and then machinery at the end after depreciation we will show it on the credit side. Then establishment expenses 30,000. These are the items appearing on the debit side of our contract account. Then on the credit side we know materials at the side, that is what our closing material at the side 16,000. Machinery 2 lakh given in our question. Then from it we deduct depreciation 20,000 and the balance 1 lakh 80,000 appear on the credit side. Then the other item on the credit side we know work in progress. Here we have work certified 7 lakh we received as 80% of work certified. So actually work certified is equal to 7 lakh divided by 80 into 100, that comes to 8 lakh 75,000. Here in our work in progress we have only work certified. Now information about work uncertified. You have to note that point. Then the total of our credit side 16,000 plus 1 lakh 80,000 plus 8 lakh 75,000, that comes to 10 lakh 71,000. From that 10 lakh 71,000 we deduct the total of our debit side items. We get notional profit. Our notional profit 3 lakh 31,000 here. Then we brought down that notional profit to the credit side of our contract account 3 lakh 31,000. Then next we have to divide this 3 lakh 31,000 in between our profit and loss account and work in progress reserve. Here our work completed more than 50% we know, but it is less than 90%. So amount credited to profit and loss account is equal to notional profit 3 lakh 31,000 into 2 by 3 into cash received divided by work certified. 3 lakh 31,000 into 2 by 3 into 80 divided by 100, that comes to 1 lakh 76,533, and the balance, this difference between 3 lakh 31,000 minus 1 lakh 76,533, we transfer it to work in progress reserve. So our work in progress reserve is equal to 1 lakh 54,467. I think the contract costing explained here is clear for all of you. We will meet again in our coming sessions. Till then, goodbye.